Hey, everybody. Dan Turbyville here, and welcome to the Powerhouse Fence Show. Thanks for stopping by. I've, sorry, my phone was going crazy there. So today is going to be the first episode, probably in a little series. I don't know how many episodes it's going to be, but we're going to talk about starting to know your numbers and understanding them. So we're going to talk a lot about today will be a lot about really basic financial terms and definitions and kind of the basic layout of a profit and loss statement or an income statement. So there you go. That's the preview. That's what it's going to be. So we've got our sponsors: Memphis Fence Company, MFC Manufacturing, Simpalo, and we have a few partners listed up here on the top. We've got the Thornton Fence Consulting Group. So they do events, and they've got a few. I think Tony's got 2 books out now. He's got Fence GPT going. They'll come to you and do on-site consultations if that's what you want to do. Career, you know, I think he's been in the fence industry since he was like 16 or something like that. So he's been around the block. Definitely check him out if you're in the market for that sort of stuff. We got Fence News. They do a great fence industry publication. It comes out in a big, giant newspaper looking magazine every month, and they have Pete and Jake in there, and they do calendars and things like that. They're cool people. Check those out if you want to stay up with the news. And then EZG Manufacturing, they make the big orange machines. So fence hog, barbed wire hog, things like that. I like their stuff. We use it. It's cool. It definitely helps with our efficiency and helps to not break people's backs as much, I guess. I don't know. All right. So I am live right now, but I'm not going to take any phone calls today because I'm here alone. So I will do my best to read any comments if anybody puts any in there, but the subject is going to be a little bit deep, a little bit heavy, I guess. So I'm going to try to, maintain focus on that, but there will be a few points where I can stop and say hello to people that stop by. So are we, I've been talking about listening to The Speed of Trust. I'm still listening to that, so nothing new. Somebody else put me onto a couple different books today that I plan to check out after I get through that. But for now, I'm still trying to make my way through that. So thank you everyone who listens to the show. I really appreciate it. Um, that's really what I have to say about that. If you like it, maybe give us some sort of review or comment or thumbs up or smiley face or whatever works on the thing you're listening on. And you can share it with a friend. So if you have any suggestions on what you want to hear, what you want us to talk about, if you want to be on the show, anything like that, we're always open to any of those type suggestions, and we do our best to try to accommodate. So reach out if you check any of those boxes, and we'd be happy to talk to you. All right. So first, right out of the gate, I want to just, I don't know, complain, maybe tell a story. That's what we'll say. I'm going to tell you a story. So we all, by now, you know Chat GPT, right? You know AI. You've heard about it, you've read about it, you've watched videos, whatever. So today, working with Chat GPT, trying to create a prompt that will be used in something later that I'll talk about. And I mean, I basically spent a solid 3 hours today trying to make this prompt, right? It's fairly complex. There's a lot of stuff going on. It all has to be accomplished in one prompt. And so I can't break it down into multiple questions or anything like that. I'm trying to lump it all together in one thing. And it's just struggling. And me and Chat GPT are struggling together, and we're really, man, we've been butting heads and trying to get through this thing, and we're struggling to get to the point where we got one prompt that works in a lot of different situations, which is ultimately the goal. So today I got to experience yelling at Chat GPT. I put on my caps lock and I put on my grumpy face and I just went to town on the keyboard. And I don't understand why you can't fix this. And I said, I want you to spend as much time as it takes to find a solution to this problem. I don't care if it takes you the rest of the day. Still didn't work. I've yet to get to the point where the problem is not solved, right? So, um, but it was frustrating. It crashed. I don't think I've ever experienced Chat GPT crashing. I think it did it 2 or 3 times today. And I mean, the screen just went blank. It was like, nope, I'm out. I'm done. But we're working through that. And so, just thought I'd share a little story about my excitement and my frustrations today. So now we'll get into the actual point of this episode. And I'm sorry I was late. Yeah, that happened, but I'm going to try to get through this stuff and try not to be too late. I wish I could take a phone call right now because Claiborne is calling me as we speak. And I would put him here on the air with you if I could, but I can't. So I try my best to deliver meaningful content that's going to be beneficial to anybody that listens to it. I try my best to deliver things that are either based on experience, so things that I've lived through, things that I've done, things that I've experienced, or it's based on research that I've done. And so a lot of the stuff that I'm going to talk to you about today is from the generally accepted accounting principles, or the International Financial Reporting Standards, various other online sources. I did use ChatGPT 4.0 to compile this stuff. It is a great research tool. It can search the internet very effectively and find you stuff. So you just got to be careful when you're making the prompts. If you explain to it that you want credible information and you want sources, then I find that it normally does pretty good. Like, I'll tell it not to make anything up, right? Don't give me false positives. Don't hallucinate. Don't make stuff up. So all of the stuff that I have in here either is based on my own experience or based on my research. A lot of the stuff I thought I knew, I did research, and just to solidify that what I'm going to say today is correct. So if you want to see any of that, or if you question anything that I have in here, then feel free to reach out and I'll be happy to show you where the information came from and have a conversation with you. Mark Cobb, thanks for stopping by. So, also, I guess that was disclaimer number 1, right? Is I did research. I put in work to come up with the information I'm going to share with you, or to verify the information I'm going to share with you. The next piece is people have different opinions, right? Not everyone uses the accounting principles that I mentioned earlier. Not everyone does things the way that we do things. So everyone has different, or a lot of people have different opinions. And again, this is my opinion, solidified by research that I did. So if you disagree with me, that's fine. Just don't hate me, right? We can disagree and we can still be friends. It doesn't mean we can't get along. Again, I do welcome any conversations if anybody disagrees on anything. If you have questions about any of this stuff, feel free to reach out. And if you're really bold, you can come on the show and we can talk about your questions right here. And that's gonna, maybe there's somebody else listening who has the same question who doesn't reach out, right? So we might be able to help some other people by you asking the questions that you have. So before we get off too deep into the whole financials and knowing your numbers and all of that kind of stuff, let's talk about why we even care about this. Why does it matter, right? People talk about this in the fence industry, I'm sure in other industries and things like that a lot, but why does it really matter? Well, there's a lot of reasons why it matters. So, if you're going to make any kind of financial decision, you need data to make those decisions. Of course, we can go all the way down to the basics of, are you growing? Are you shrinking? Are you making money? Are you losing money? I'll tell you, I like mixing in these stories, right? So, whenever I bought Memphis Fence Company in 2013, The accounting was done. I don't even know how to really effectively describe it. I'll tell you, there was like some old AS400 green screen computers. They were just a keyboard, not anything like a computer that we interact with today, right? It was, you could probably see some if you watch some old movies or something like that. I don't think of any off the top of my head, but there those were in place, but it wasn't really didn't seem to really be utilized super well. There was a notebook in the secretary, office manager, lady's office. And if you wanted to know the current balance in the bank, you went and looked at that notebook. And every time she would do a deposit or do a check run or anything like that, the balance in the bank would be updated on that checkbook. And that was about the thing that they had to really like see what was going on and have a feel for it, at least at that point. I don't know if there was anything better that was done before then. But I know when we got to that point and leading up to me buying the fence company, that's what was in place. And I didn't know nothing about nothing, but I knew that that was not going to be the thing that we were going to do. So um, we tried one software that was already here actually and running parallel to the system, and tried it for about half a day and said, no, this thing sucks. We're not going to use this. And then we swapped over, got QuickBooks, set it up. And over the course of the last 12 years, we've really tried our best to learn how to use it and learn how to do what we need to do. So, anyway, um, yeah, so that question, are you making money? So before all of this, I made an Excel spreadsheet one time because you'd always hear this thing of like, oh man, we made so much money on that job. Oh, we lost so much money on that job. We did this, we did that. And I was always really curious how you know, because it's not, we don't work on one job at a time, right? We work on a lot of jobs at one time. And so it's really hard to sit down and say, well, our account balance increased over the past 4 months. So that had to be because we did good on this one job. You can't do that. If you did 60 jobs or 100 jobs in 4 months, well, how do you know it was because of that one job? And how do you know that all the other jobs didn't make the money and that one was the one that actually lost the money, right? So I knew that was not the way. I knew we were not going to work like that. Like I said, I made a spreadsheet and I manually went through and tracked stuff, and I like kept track of the hours that people were putting into the job and the material purchases and all of the expenses that went with the job and everything else. I didn't really learn much from it, but that was kind of like my early introduction and my early exposure into the job costing, P&L, stuff like that kind of world, right? And I really didn't know what I was doing. But I was trying because I knew it was a hole that needed to be filled. So now I'm going to pause and I'm going to say, Seth says, hey, what's up, Dan? Good Thursday evening to you. Well, good Thursday evening to you too, sir. Thanks for stopping by. So, sorry. So I knew there was a problem. I knew we needed to fix it. I knew we needed to go in a better direction. And anyway, here we are running QuickBooks. And we do a lot of job costing and all that stuff. But if you don't know your numbers, again, are you growing? Are you shrinking? Are you making money? Are you losing money? Do you need to spend money before the end of the year? Do you need it? Say you got a broke down truck, right? Or a old truck, or you want to replace the truck, whatever reason you want to replace it. Well, as you're progressing towards the end of the year, kind of would be nice to know if you need to go ahead and do that this year or if you need to wait until next year. It's not you if you wait until next spring when your accountant or your CPA or whatever has all your taxes done and they're like, "Hey, look, you made a boatload of money last year. Now you got to pay your taxes." Well, that kind of sucks. So you can be a little bit proactive and you can stay out ahead of that stuff to multiple different levels, however far you want to try to stay out ahead of it. And you can try to predict and make educated guesses more than predicting what's going to happen throughout the course of the year. Especially once you have some years of data built up, you'll be able to say, okay, well, we're trending, or it's looking like, or this is the direction that we're heading. And then you can kind of look at your open jobs and things that you anticipate that are going to be done throughout the rest of the year. And you can really start to build that picture of what you need to do between now and the end of the year to make sure that when it comes tax time, you don't get a big fat bill. So there's another point. All right. Now, how are you bidding jobs? Right? If you don't really know the numbers, how is it possible to bid a job? I mean, it would be absolutely terrifying to me to know that I had to go bid a job and not know what my overhead numbers are and all of this. So, if you want to bid jobs correctly and want to start heading in that direction, you got to get the basics of your financial stuff down. And hopefully, that's what we're going to do here today, or at least what we're going to start off with. So, and if you're one of the people that's just, hey, I'm going to double the material, hey, I'm going to triple the material, something along those lines. I mean, if that's all you want to do and you're making money and you're happy with doing that thing and you don't want to grow and you don't want to go anywhere else and you don't want to improve, then that's fine too, right? Like everybody can do things the way they want to. But hopefully somebody out there wants to know this stuff and I'm going to try to help. Susan K. Worley, thanks for stopping by. I actually thought about you today and I wasn't sure if I was going to make it on this episode or not. And I thought about replaying your favorite episode ever and I don't know, putting Cash is King for Susan K. Worley, something like that. But yeah, so if you're okay doing what you're doing, then that's okay too, right? But I don't know where I was, right? Oh, and hey, maybe you just make enough money doing what you're doing and you don't care and you're never going to change. But what if you need a loan for something? Sure would be nice if you had something to email or hand or deliver to your banker however you see fit so that they could see what was going on. I mean, what if you could give them, I don't know, my previous 2 years, trailing 3 years, whatever, and give them a year to date and say, here's how the past 2 or 3 years went. Here's how this year's going. Let's talk about a loan. I want to make this investment. I want to do something different. I want to expand. I want to grow. So, as a side note with your banker, if you don't have a relationship with a banker, you should find one and you should start working on that relationship. It's a huge thing. I have a relationship that's good with one banker, decent with another. We are kind of split up around a few different places for various reasons, but so I think it's one of the reasons why we're sitting here today, I think, is because we were connected with this banker way back when, and he was able to work some stuff with us, and we were able to do some creative financing, and it was able to help us to sustain this business long enough to try to get headed back down the right path. So again, if you don't have a relationship with a banker, you should work on it, and you should try to start building one. Here's a big one. What if you want to sell your business? Imagine someone is considering buying your business and y'all start talking and they say, okay, well, send me your last 3 years financials. And the only thing you have to send them is a tax return. Like, yeah, you got something, but it's not what somebody's going to want to see if they're trying to buy your business. And it's not what you're going to want to show someone if you're trying to sell your business. So if you want the maximum value out of your business when you sell it, then being able to produce some sort of financial information that you can deliver to a potential buyer is going to be a big deal. And I like again, tax returns, like, yeah, that's something, but it's not going to be what people want to see, and you're not going to get the money for the company that you would if you had a nice, polished, well put together set of books, financials, all of that stuff. So there you go. There's you a few reasons. And that list, I could spend this entire episode just talking about all the reasons why you want to know your numbers and want to track your financials and want to understand how this stuff works. We didn't even touch on why you really want to understand it, right? So that's a whole nother thing. But today, the objective is we're going to start with the very basics. Okay. So we're going to talk about financial terms and definitions according to those standards and research and stuff like that I talked about earlier. So I'm going to go down this list and it's going to be in the order that it would appear on an income statement or a profit and loss statement, which, well, hey, we can start with that, right? So an income statement, profit and loss, P&L, there's a lot of this stuff, there's multiple terms used for them. Um, but that basically is going to be normally a piece of paper, a PDF document or something like that. And it's going to show your sales, your cost of goods sold, your gross profit, your expenses, your net income, and then the other things that go below that, which we're not going to get into. But we're going to give you a breakdown of all of those things that I just mentioned. So that's it's going to be so much fun. We're going to love it. We're going to have a great time. So first of all, sales. Sales is an interesting word, okay? There's a lot of interesting words, and if you've listened to the show for very long, you know that I like interesting words. So sales typically in this financials and P&L statements and all of that stuff world is actually your revenue. Okay. So this is your total revenue generated from the sale of goods or services related to your company's primary operation. So generated from the sale of goods or services related to your company's primary operation. All right. So for us, we're fence company. We go out, we install fence, we install gate, we install gate automation. We installed some parking blocks or wheel stops or whatever for somebody, a few weeks ago. Like all of this stuff, that's your revenue. One thing I didn't really, hey, y'all remind me to talk about cash basis versus accrual basis. So we'll get to that in another episode. But so yeah, your revenue is really the word that you want to use for the top line on your income statement, revenue. So sales, typically a lot of people talk about that is like commitments, right? Jobs that I got a contract signed on, that's not what we're talking about. We're talking about jobs that you completed and depending on if you're cash or accrual, billed. We'll just leave it at that. Okay. So top line, right? Gross income, sales, revenue. Again, a lot of this stuff has a lot of different words that you can use, and it means the same thing, and it makes it a little bit confusing. So it's the total income generated for what you build. And if you go a little bit deeper into that, you can get gross sales, which is your total unadjusted revenue, and then net sales, which is your gross sales minus returns, allowances, discounts, things like that. All right. So we got sales, which is revenue, which is the top line of your P&L statement, which is a pretty important number. So now the next thing we were going to talk about is income. All right. So in standard accounting is the increase in economic benefits during an accounting period which results in increasing your assets or decreasing your liabilities. Okay. So there's a different term is income. In business, it really encompasses both revenue and gains from other activities such as investments and things like that. So kind of lumps all of your money that comes in gets lumped together into one word, and we call it income most of the time in business. And so just one word, income. Okay. Because there's multiple places on this sheet right here that we're going to use that word. That's number one. So gross income, right? We talked about gross sales, net sales. Gross income is also sales revenue, right? All of those are just kind of lumped together. So that feels super confusing. It felt like it would make sense whenever I put it on a piece of paper. Feels a little bit more confusing now that I tried to explain it. Revenue is your top line of your P&L. Revenue is the total that you maybe build, the total that you did for the year, right? Not the total jobs that you got contracts on, not any of that kind of stuff. It's the total jobs that you build for if you're accrual-based accounting. All right. So now you got the top line, sales. The next thing down, you're going to have cost of goods sold. And cost of goods sold is direct cost. All right. So remember that word, direct cost, attributable to the production of goods sold by the company. Okay. Direct cost attributed to the production of goods sold by the company. So generally, material and labor are two things that go in there, right? But it's only labor that's directly related to completing a job. So if you go out, send a crew out to go install a job, whatever labor you pay that crew while they're working on that job. And for me, that's when you're loading the truck, you're going to the job, you're doing the job, you're coming back, you're unloading the truck, you're cleaning the truck, you're doing that whole process that's all related to that job, all goes in my cost of goods sold. It's all directly related to producing that job, to getting to where I can send that customer an invoice. All of that goes straight into there. So, material, again, if it's directly for that job, which not every job we do requires material, but the majority of them require some kind of material, right? So most of the material that you do that goes on a job is all directly allocated to that job, also cost of goods sold. So I kind of touched on this a little bit, but does not include indirect expenses. So if you have salespeople, you have vehicle maintenance, you pay a Simpalo subscription, things like that. You like how I slid that Simpalo in there? Things like that do not go in your cost of goods sold. Those are indirect cost or indirect expenses. Now, if you rent a vehicle or rent a piece of equipment that's specifically for a job, that does go in your cost of goods sold. So I put the cost of the rental, the taxes, the delivery fees, the environmental fees, the we want to charge you fees, like whatever it is that they put in there, we put all of that stuff in there. Okay. And oh, Isaac. I need to like take the comments off of the screen because when I sit here and I try to go and then a comment pops up and hey Isaac, thanks for stopping by. Let me circle back to your question. So again, if we rent a piece of equipment, we put the rental, the taxes, the delivery, the fees, whatever kind of crap they come up with to put on there. I put all of that in the job. If I buy let me circle back to that. If it's for general purposes, it goes into expenses or overhead, and we'll circle back to that here in a minute. So I think about a job that we did. Well, I mean, we do some jobs where we have to rent equipment, right? We rent lifts and telehandlers or lulls or whatever you want to call them. We rent those a decent bit, and all of that stuff is all directly allocated to the job, right? But I think back to a job where we had to buy a bunch of safety equipment for that job. And to me, that's where the gray areas come from and things get a little bit muddy for me because it's like, all right, we had to buy the safety equipment to do this job, but at the same time, we're going to use it on another job in theory. Actually, most of this stuff has been sitting in buckets down. We've got, I don't know, 4 or 5 55-gallon drums full of this stuff. And every once in a while we pull something out of it and use it, but it's not really been used much elsewhere. But that's where things get a little muddy, right? So if I buy a harness and yo-yos and all of this fall suppression stuff, right? If I buy that and let's say I spend $500, I bought the $500 worth of equipment because I had to have it for that specific job. But at the same time, if I go use it on another job, where does it go? Right. And I'm sure that if someone dug enough, you could find a good answer for that. I tried and I could not find a good answer for that today with the time that I spent. I'll say we probably do it a little bit of both ways. And I probably look at it and just kind of make a call. If it's something that I think we're going to use fairly regularly, then I'll run it through expenses. If it's something that I think we're not going to use very often and we had to have just for this job, I'll probably put it in cost of goods sold for that job. So that's me personally. Again, kind of gray area thing. I don't know. But anyway, so you got the idea, right? Mainly material, labor, things that you buy or rent directly for a job that enables you to give a customer a bill is cost of goods sold. So now we get to gross profit. So gross profit is your revenue minus your cost of goods sold. Your revenue, remember, oh, wait a minute. Before I talk about gross profit, let's address Isaac's question. So where do you put fractional sales cost? So Isaac, are you talking about no, that's factoring is what I was thinking. I I need to keep Google up when you come in here, man, because you always ask me these things and I don't. Fractional sales. Fractional sales refer to hiring experienced sales professionals on a on a part-time or project basis, providing businesses with access to expertise and flexibility with. Okay. So what I understand from your question, Isaac, is if I were to hire you, where would you go? Is that correct? Hiring experienced sales professionals on a part-time or project basis. So I think that's a determining factor, right? Um, if it was on a part-time basis and you're working on multiple projects, then for me, it's going in expenses or overhead. If I hire someone for a specific job, then it's going into the cost of goods sold for that job. But so I think with you, Isaac, if I were to hire you and have you bid, 10 jobs a week for me or whatever, well, all of that's running through my expenses. That's all going into overhead. Uh, you could get really technical on it. And if we sold a job, we could do a journal entry and move it from expenses up to cost of goods sold for that job. I'm not going to get that deep into it because I suspect it wouldn't amount to enough difference between the two to really justify the time that it would take to do it and, putting in processes and systems and stuff like that to do it. So, uh, hopefully that's a sufficient answer for you. If I hired you, you would be in expenses. All right. So gross profit, revenue minus cost of goods sold, sales minus cost of goods sold. So sales is the total things that we build for, the cost of goods sold, material and labor. So you take the sales minus the cost of goods sold gives you gross profit. Gross profit is the margin number. So when you hear people talk about their margins and things like that, that's this number. Typically, it's going to be a percentage of your sales. If people talk about my margin was 56%, well, good. That's 56% of the revenue made it to gross profit. Okay. So if you sell $100,000 and you hit a 40% margin, that means your gross profit's $40,000. So that gives you $40,000 that's going to flow on down the line into the next things that we're going to talk about. So not a whole lot to talk about with the gross profit. That's pretty much it. Expenses. So first thing I put under expenses is this is a bear. Many people stress a lot about expenses. There's a lot of, if you listen to books, listen to podcasts, listen to people talk, and I'm talking like, big time CEO type people. There's a lot of different opinions about this. Some people really worry about expenses. Some people really worry about revenue. And there's, people have different opinions of which one they put more energy into. You can decide all that yourself. But expenses, it's so hard for me because I look at our overhead, which is expenses, right? I look at those and I think, man, I want to reduce my expenses. I want to reduce my overhead. And then I start going through this stuff and it's like, what's in here that I can reduce? And it's like if I change garbage services, maybe I could save $10 a week on that. Maybe I could save $40 a week, whatever that is. But really, that's not moving the needle. And you would have to do that so many times to make a 1% difference in the overhead that it's really hard for me to focus on it. And I'm not trying to tell you that that's the right mentality to have. I'm just trying to tell you that's my mentality. I have a hard time really diving in and looking at expenses. Now, there's big line items in there, right? So, salespeople and people that are in sales, management, admin, all of those are in overhead. And then you have vehicle maintenance. Man, there was a time I've been through multiple paths down this vehicle thing. And there was a time where I was like, you know what? I'm not buying any new trucks. These things are crazy. I'm just going to run these old trucks that we got and I'm going to run them till the wheels fell off. Well, then the wheels fell off and we kept running them for a few years after that. And it got to the point, I think at one time we were spending something like $22,000 a month repairing vehicles. And so there's a example of the time where I did not stay on top of those expenses, and it just crept up and crept up and crept up and crept up, and then all of a sudden one day it smacked me in the face, and I was like, "Holy smokes, we got to do something." Well, now it's not like, well, depending on what you're trying to buy, you may not be able to just go out and buy a truck tomorrow. So for me, at the time when I first started down this path of trying to buy trucks, I couldn't go out and buy a truck tomorrow. It took me almost a year to get the trucks that I was looking for. And then I ordered another truck, and I had to order it 2 years in a row before Ford ever actually built it and shipped it to us. And so it was a challenge to get trucks there for a while. But anyway, that was an example of me not paying attention to expenses and not comparing our year over year over year expenses, because when you see something and it just creeps up a little, like it slowly goes up, right? And you may not pay that much attention to it and you may not notice it. And then all of a sudden one day it's like, wow. So you don't want to do like me. You don't want to get to that point where it's like, holy crap, I need to stop what I'm doing and address this situation right now, when it's really something that I should have been looking at for, I don't know, a few years leading up to that, right? But hey, every day when I come in here and I go to work, I try to learn something, right? And that was a lesson that I learned. So now, when I looked at that, I kind of did some math and I was like, wait a minute, we could pay a lot of truck notes for that same money. And that makes a lot more sense. So if anybody wants to buy a raggedy old used truck with the wheels falling off, let me know. I got a few out here for you. So, um, anyways, expenses, overhead. So remember earlier we talked about the direct and indirect cost, right? So this is the indirect. So these are things that are, the phrase that I saw multiple times when I was preparing for this was general purposes. So it's not specifically for a job, it's for general purposes. So Isaac, again, I would put the money that we paid you into that general purposes category, right? Because it's not like we're paying you specifically for a job that we have sold. When we did all those vehicle repairs and stuff like that, we were talking about a minute ago. We were talking about, yeah. Uh, so all of that was for general purposes, right? Because the same truck goes on a bunch of jobs over its lifetime. And so it's really just for general purposes. It's not specifically to a job. We talked about renting equipment. So also my opinion of, to circle back to that whole rental stuff, we rented some trucks before for jobs. If we're working, depends on where there's 100 variables in there that I'm not going to talk about, but some situations it makes sense for us to leave our fence trucks on the job site or close to the job site and drive cheaper vehicles back and forth, right? And so we've done that before where we've rented, look, cars or trucks or something like that just to kind of commute back and forth with. And so all of that straight into cost of goods sold. That's Let me just get on this for a second. That's why it's really important when you're bidding a job to think about all of the stuff that's going to go into the job as well. Because you don't want to get on a job that's a 6-month job and then realize, oh, wait a minute, we either have to drive these trucks back and forth that are getting 7 miles per gallon or whatever, or we have to rent a vehicle to drive back and forth. And like, I didn't put any money in there for any of that. Right. So you got to think about those things when you're bidding a job, spending time in those expenses and you seeing all the line items that are broken out is really going to drive that home, because now you understand what all you're spending money on. There's another reason why to do it. I should have put up at the top, but yeah. So depends on, if I rent a forklift to stay on our yard, right? We say we have no more machines to put on the yard and I got to have something to cover me for the next month. I'm not going to go out and buy something. I'm going to rent something, put it on the yard, run it for a month, and then let them have it back. If I do that, that is for general purposes. That's going into overhead. I hope that I'm delivering this effectively enough so that people kind of understand what I'm talking about. I'm trying. But anyway, insurance. So you can get deep into insurance too. Insurance for me goes in expenses. It is all indirect cost. It's all going into overhead. You pay. Well, workers' comp can be paid different ways, but one of the ways you pay workers' comp is a percentage of your payroll, depending on where it is and the type of payroll it is. So, if you really wanted to get deep into that, you could break out a part of your workers' comp and put it into your cost of goods sold and allocate it directly to jobs. I don't do it. I basically just roll it all the way down through overhead and absorb it across all the jobs. You pay salespeople, you pay some, administrative people that are in the office, you pay someone on the yard to unload trucks and load trucks, and maybe you sell wholesale and they fill wholesale orders. Like all of that is indirect, right? So you can see how none of that is directly for one specific job. So that's the stuff that goes in your overhead. Now, I mentioned earlier weird scenario, right? But I had a couple more. So you get a really abnormally large job. Let's just say, let's run through a hypothetical situation. You have a couple trucks, but you don't have any skid steers. You don't have any of that. Maybe you got a little beaver or walk behind mini skid steer, something like that. But you need a full size skid steer. You sell a really big job. It's going to take you a year to do it. So you look at it and you say, man, uh, I can't do the job without it. And if I rent the thing for a year, it's going to cost me as much as buying one. Right. So now what do you do? So that's really, if you're buying a piece of equipment, that's an asset. Right. So you can figure out ways to allocate some of that to your cost of goods sold for that job. But really, it's going to be an asset, which works a completely different way than any of this. But you would then the depreciation on that asset now winds up in your expenses, right? So it's depreciation is a whole nother thing, right? So if you buy something that costs $50,000 and it's typically a skid steer, different pieces of equipment, let's say you buy one that's 50 grand. And normally you're going to depreciate that stuff for 5 years. So you depreciate $10,000 a year, or you can do some like Section 179 bonus depreciation stuff or things like that. And you can depreciate more of it on the front end. So there's a few different ways to go about that. But basically it's the reduction, the standardized, theorized reduction in value of that piece of equipment. So that 5 years is its expected lifespan that somebody came up with somewhere along the way. You look at buildings, and I think you depreciate them over like 30 or 50 years or like a long time. So it depends on the type of asset, and there's multiple different depreciation methods and all that, but we're not trying to get into that now. So you buy a piece of equipment, and typically that piece of equipment, if it's a skid steer, if it's a $50,000 piece of equipment, it's going to become an asset. You buy a truck, that's going to become an asset. Again, you could figure out some kind of way to allocate some of the cost to that job, but really it's an asset and your only cost is depreciation. So hopefully I'm just gonna periodically, I just have to pause because two things. One, I want to just like let that be a separation between the thing I was saying and the thing I'm gonna say. But then also sometimes you just need a pause to gather your thoughts for what's coming next. And so now I've wasted my entire pause talking about a pause, and now I don't know what I'm gonna say next. So uh your overhead is typically, I look at all of this stuff as percentages. Okay. So if I look at last year's sales versus this year's sales, man, I look at a percentage of increase. Did we go up 3%? Did we go down 3%? I try to look into those percentages. And then the next thing I'm going to do is I'm going to say, okay, sales increased 3%. What did my cost of goods sold do? If my cost of goods sold increased 27%, well, that doesn't make much sense. We screwed up somewhere. So you can see how, even without job costing, without doing all of that, you get some of the information, right? You can look, once you kind of have a little bit of history, you can look at your sales versus your cost of goods sold versus your expenses, and you can see how things are trending. Um, hmm. So expenses can be as broken down or as lumped together as you want. What I would suggest is maybe look at a tax form. Like if I was starting from a blank slate today, I didn't do this before, but I think what I would do is I would look at a tax form and I would say, if I'm going to go file my taxes, here's the 15 categories the IRS allows me to put expenses in for whatever type of business I am. And I would start there, right? And then that when you got to the end of the year or got time to file your taxes, like you already have all of that stuff done and it's ready to go. You yeah, you can define where expense accounts go on a tax return in QuickBooks, but it's going to give you a good place to start, and it's going to give you a list of expense accounts that you can then use for your business, and you can start allocating things into those expense accounts. And the further you go, the more refined you can get that, right? You can break it down however you want. You can split it up as fine as you want to split it up. Just keep in mind, the more you split it up, the more you have to track. So there's that balance. Me, I love data, right? I love to nerd out on things. I love looking at data. I love tracking data. I love all of that stuff. And so I mentioned our trucks earlier. So kind of my first peek into, oh crap, we have a problem with the money we're spending on trucks. Um, I we went in and we broke down every truck and trailer and skid steer that we have has its own sub expense account. So they all lump together back into one thing, but they all have their own sub account. So we can look and we can see how much money we spent on every truck that we have, every trailer, every skid steer performing repairs, right? So I separate repairs from maintenance. And the reason is if the cost of repairing a truck, trailer, skid steer ever exceeds the cost of paying a note or even gets close to the cost of paying a note, it's time for me to dump it. So that's a big red flag for me is, man, we're spending as much money repairing this thing as we would be if we had a new one. Well, guess what? Theoretically, this is not the case, but theoretically, if you had a new one, it's not going to break down or it's going to break down less, right? You have an old one that you're spending a bunch of repair money on. Well, that means it's breaking down a bunch. And you have a crew without a truck if that thing breaks down. So, sorry. So I just keep going down these little rabbit holes, right? But anyway, you can see how like we have a reason for having that stuff broken out the way that we have it broken out. And that's what I wanted to be able to look and see because I think when I first started kind of diving into that one line item on the expense in our expense accounts, I really started diving in there and it was really difficult because you had to like look at invoices and you had to, build an Excel spreadsheet and you had to try to put things here, there, and try to split it all out. And I didn't really want to do that. And so I was like, hey, we're going to split all this stuff out. And again, you can get as deep into anything as you want. I mean, you got we get a lumped utility bill. So we get electric, water, and gas, light, gas, and water. So we get all of those together and we just put it into one expense account called utilities. Now I could split it out, right? If you look at the bill, it's itemized on the bill. So I mean, I could split that out, but it really serves me no purpose. I don't know why I would want to do that. So I don't. So again, it's all up to you how deep you want to get into it or how high level you want to be. But at least if you can get to the high level, start collecting data, start looking at it, start trying to understand what it means, then that's going to show you trends and show you how things are going and show you what and it's going to lead you to what you want more information on and things that you want to break out more. So you don't have to start off right out of the gate with everything broken down and having 300 expense accounts or anything crazy. You can probably start with 10. And if you can start with 10 expense accounts and just categorize that stuff into one of those 10 places, find the one that fits the best. And then from there, if you're like, man, my utility line item sure is big. Well, now you can break it out and you can see that, oh, well, I had my electric, my water, my gas, my phone, my internet, my cell phone, everything was all in that one line item. Like now you can start breaking that stuff out, right? So that's how we got to where we are as far as like, having our expense account set up in the way that we track things and all that stuff. So, oh man, percentages. Sales go up and down. Cost of goods sold goes up and down, expenses go up and down. And so the key thing for me is, do they go up or down at the same rate? Again, if we have a huge percentage increase or loss difference between the two things, or a big jump or drop in percentages for our cost of goods sold or our expenses, that's something I'm going to investigate. I want to know why. I want to know what happened. If our sales were flat and our expenses went up 20%, our overhead went up 20%, what happened that made that go up? Right? If our sales were flat and our cost of goods sold went up 20%, well, odds are we screwed up. We didn't bid jobs the way that we were supposed to, or we missed something on a job, or material prices increased and we got caught unprepared. We didn't plan for it. We didn't do our due diligence, maybe. Whatever that is, I want to investigate that stuff when I start seeing these problems, and I want to see, where did we go wrong? But you don't know any of that if you don't have good data. So I guess what I want people to walk away from that whole thing with is one word: start or try. Yeah, could be either of those, right? Just do it. You can go get QuickBooks Online. It's like $30 a month. And it's built now to where it's fairly intuitive. There's a bunch of AI tools in the world. You've got somebody preparing your taxes, I assume, or you're going to have somebody preparing your taxes, right? So there's another relationship that you should build, kind of like we talked about with the banker. You should have depending on your goals, objectives, where you are, all of those things. You might just have somebody preparing taxes. You might have a CPA that looks at your stuff periodically. You might be preparing, reviewed, audited, whatever financials every year so that you can submit to contractors licensing boards and things like that. So there's a lot of different possible scenarios that you could find yourself in. Talk to those people too. They can help you. And maybe your cousin, I don't know. But like I said, if you start with the tax form, that's at least going to get you something going. So let's see. Isaac says, I'm doing my first year in business, so it's a blank slate. Perfect time to start. But I heard an ancient Chinese proverb. It says, when's the best time to plant a tree? Well, the best time to plant a tree is 20 years ago. The second best time to plant a tree is right now. So plant that tree. Get started. Don't go 10 years without doing it. JC Gurry, thanks for stopping by. All right, so finally, let's get to the fun part, right? Let's get to the fun one. Let's talk about profit. I put on here, I said, this is my jam. Let's talk about this. So bottom line profit, your bottom line, really called net income or maybe net profit. Because remember, gross profit also has the word profit in it. So now we get down here, and I like to use the word net income whenever I'm trying to really be clear about what I'm talking about. If I'm having a conversation with somebody and it's super casual, I might call it profit. But net income is the one that I kind of steer towards. So I will use the term sales for my top line. Again, if I really want to, be super clear and I'm having a like really formal conversation, I might call it revenue. But then cost of goods sold is always cost of goods sold. Gross profit's always gross profit, unless it's the percentage, then I might be saying margin. And then expenses to me are always expenses, unless it's that informal situation, I might say overhead. And then I get down profit, net income, same thing, right? If depending on the formality, depending on how formal the conversation is, I might use two different phrases for all of these things. So keeping everyone on their toes, even me. So remember, sales revenue minus cost of goods sold equals gross profit. And then gross profit minus expenses equals net income. So not super complicated math there, right? To me, the hardest part of all of it is probably starting and then building your expense accounts. Assets and depreciation and stuff like that. Those are a whole nother thing we're not even going to talk about. Don't worry about that today. We'll talk about that later. But you want to at least be allocating your sales and things like that to the right place. And then, your cost of goods sold and expenses, those two need to be separated. And then your expenses, like I said, start with a handful of accounts. Don't get super crazy on the front end. Then you can break it down more and more and more as you go. It's all just a process, right? Just getting started is big. I like to look at my net income or my profit as a percentage as well. If you haven't figured out, I like percentages. Percentages are a great equalizer too. So if somebody calls me and you did $47,000 in sales last year, guess what? We can talk about percentages, right? Because you can tell me, oh man, my utilities, they were 47%. And I'm gonna say, holy smokes, what are you doing? Right. So if you told me that your utilities were, $600 a month, I'm like, oh, okay. Right. But if you told me a percentage, then that makes me understand. And now I can relate your utility percentage to my utility percentage. And then we can have a conversation about it. So percentages are the great equalizer. And not everything is going to be level, right? So utility, I don't know why I keep talking about utilities. It's not like I got a crazy utility bill or anything. It's not fresh on my mind. I guess I am using electricity, so maybe it's just here, but whatever. So utilities are kind of one of those things, right? Where if you did $10,000 in sales and you've got a building that has lights on the parking lot and you got lights in the building and, heat and air and da 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 da, well, your utility percentage is probably going to be pretty high. But if you do 10 million in sales and you're still working in that same building with those same street lights, and maybe you've, expanded the parking lot or expanded the laydown yard that you have or whatever, like you can see your utilities aren't really going to increase that much. So things get a little bit weird with percentages, but in general, I think it really levels the playing field and lets people have conversations who are different size companies. So percentages are important. Kind of levels things out, right? So there's more stuff that goes below net income, really. But we're not going to get into that. This thing is already complicated enough. It's already confusing enough, right? So just know there's more stuff that goes down there underneath your net income line. You can put other things below it. But for now, just start with the basics, right? Let's start with our sales, cost of goods sold, our expenses, and our net income. And if we can start there and then keep going, right? I mean, that's the equivalent of learning to build one fence, right? So at one point you knew how to build one fence, and then you learned how to build another, and then you learned how to build another, and now you know how to build any fence, right? So same thing. Build one fence in the accounting world, and then you can build two, and then you can build three, and then you can build four, and you can just keep building on that foundation, but you got to get the foundation laid. So there you have it. We made it. That's the introduction and basics. Really, we just talked about a lot of accounting terms. Basically, I gave you a bunch of definitions. But again, that is the way that a profit and loss statement's laid out, or an income statement. That's the formatting that it's going to follow. So if you do look at it, it might not be labeled really well, or there might be different terms on it that you don't recognize or something like that. So that's the reason why I tried to say, like, this particular thing has multiple terms, because some people might put something different on there. But yeah, that's the super basics of it. And there's a lot of accounting terms, and there's a lot of crazy stuff in the world that you'll run into and that you can do. But it's okay to not know, you know, if you were watching, Isaac asked me a question, then I Googled it. I Googled, what is fractional sales? So, I mean, it's okay to not know everything. So just start trying to learn, start trying to grow. And that's it. If you got any questions or anything, feel free to reach out. Normally we have a phone number scrolling on the bottom of the screen. It's not there today, but it is 90. Actually, hold on. I'm going to put it up there. There you go. 901-878-4987 is the phone number. So if you ever want to call me, that's a number you can use to reach me. Also, you can look us up on any of these places that we talk, any of our sponsors, because, you can get a message to me through those sponsors who are completely unrelated to me. So if you want to, if you got any questions or anything, feel free to reach out. We're always happy to do whatever we can to help anybody, and we'll see you next time.